Welcome to Bloomberg Markets. I'm Bonnie Quinn. Let's get a quick check of those markets now. And overall, it looks like we're just getting fractional moves, but there is a lot going on, both positive and negative. If you look at the S&P 500, we're at 57.41, up just less than 3 points. But there's about two-thirds to a half of those stocks lower in the S&P 500. Nonetheless, we're still getting that positive overflow from the China news. The Golden Dragon Index is up 1.1%, and that's sort of holding up the rest of the market at the moment because there's plenty of bad news out there as well, right? What with the possibility of a port strike, everything that's going on in the Middle East, and lots more. The Nasdaq itself is flat right now. The SOX, though, if you were to look at it, is fully negative. 10-year yield as we wait for Jerome Powell to speak a little bit later on. Not much movement there, down by about 2 basis points. So let's take a look at some of those movers, and particularly some of the negative movers. As you can see, the car makers are having a very difficult day. Stellantis slashing its forecast, particularly for industrial free cash flow. It says now it's going to make 200,000 cars less than it was going to make by the end of this year. Of course, it's been under huge pressure from shareholders and investors to do this. Stellantis down 14%. That's having a halo effect on the likes of Ford and General Motors, Aston Martin as well, obviously. But there's more bad news for Ford. It's been put on a list of the companies that are most exposed to anything negative that should happen in China, whether it be tariffs or anything else, by strategic risks. And Ford is down about 2.5%. And if you remember, Bernstein last week said General Motors should pull out of China completely. Now let's take a look at some other stocks on the move today for our midday movers. CVS Health, the Wall Street Journal reporting that Larry Robbins is getting ready for an activist push there at Glenview. It says he has about $700 million in CVS stock of his $2.5 billion in the fund. That pushed the stock more than 3% higher earlier on. It has pared some of those gains now. EchoStar's Dish is being bought by DirecTV. That stock down 12% because it's going to assume some debt. And then Zim Integrated Shipping up about 6%. That stock, very volatile stock, but it is up 160% year to date. Of course, a lot of unknowns now regarding shipping around the world and also in the United States when it comes to that port strike that could start just after midnight. So again, the East Coast labour strike may begin in just a few hours' time. The International Longshoremen's Association saying there is a quote, no room to run on the settlement. Earlier, New York Governor Kathy Hochul had set out this plan should the strikes begin as planned.
I urge U.S. MX and the ILA to come to an agreement that respects workers, that ensures the flow of commerce through our ports, and the stakes are very high. The potential for disruption is significant.
Well, for more, let's go now to Bloomberg News reporter Dani Berger. She is live at Port Newark Elizabeth in New Jersey. Just one of the many points and ports where walkouts are set to begin tonight, Dani. Dani, is there anything going on behind the scenes? As of now, everything that we have publicly is that nothing is happening. The strike is going to start.
That's basically where we are, Vonnie. They're not giving a lot of details of the exact negotiations that had been happening behind closed doors, but there are no more scheduled talks. In the next 12 hours, 12:01 a.m. Tuesday Eastern is when the current contract runs out and the strike will be on. There's been some things in the background, like the Biden administration trying to mediate, but they are saying that they will not step in. They have the option to do so under something called the Taft-Hartley Act that would cause an 80-day mediation where people would start working again. The White House is declining to do that. So in the meantime, Vonnie, they are disagreeing over two main things. It is one, pay. They want a significant increase, nearly 80%. Over the next 6 years, and they want language written into the contract to stop further automation of these ports for fear of job losses.
What kind of leverage do the longshoremen have, Dani, given that there is a shortage of workers right now, and we know that for every day where there's a work stoppage, that takes about 5 days to undo once the stoppage stops?
Not only does it take nearly a week to undo, Vonnie, it also, by some estimates, J.P. Morgan at the high end could cost $4.5 billion a day. But you are spot on when it comes to the labor situation. There is a supply-demand issue. There are not enough people who want to do these jobs, so they have the upper hand here. The other place they have the upper hand is the fact that they are dealing with one of the most labor-friendly governments that we have had in some time. The fact that the Biden administration is not one that wants to force the hand. Of course, they're there comes to a certain point where something needs to get done. As we get closer to the election, should it look like a Trump victory, they might have a less friendly government on their side. Although Trump, according to the Longshoremen Association, has said that he is in support of the strike. But it's because of those pressure points, Vani, that many experts agree that this will only last a few days. But as you point out, even just a few days can have significant economic damage because ships will build up, there'll be capacity off of the seas, and it will take time to unload the cargo. And especially for small businesses, they could be hurt in the process.
Absolutely, and there are not many alternatives, right, Danny? Plus, the whole country is dealing with the aftermath and the impact of Helene.
That's exactly right. Bonnie, a lot of places here in Newark being one of them said that we're going to extend the hours. We're going to try to offload some of these ships quicker. That's fine and well when it comes to the northeast of the United States. But when it comes to the southeast, a lot of trucks were not running. They couldn't get to the ports to unload some of the cargo that they wanted to ahead of this strike. Now, you could divert that traffic to the West Coast. However, the International Longshoremen Association has said that there will be solidarity with this strike, that the West Coast workers, at least some of them, will be unwilling to offload some of the cargo. What's more, HSBC says that they can only handle some 17% of the entirety of the cargo that will be diverted. Canada is not really an option either. The Port of Montreal is experiencing its own strike. So, Bonnie, really one of the only option for those who can afford it is to use air freights. And again, that is expensive and something that a lot of small retailers won't be able to do.
Exactly. Danny, thank you so much. We'll continue to keep everybody posted on this. That's Danny Berger there with Bloomberg News, obviously. Well, the port strike might not just be a U.S. issue. It could have international implications. That, of course, and the upcoming U.S. elections have the world watching over the U.S. closely over the next few weeks. I was able to speak one-to-one with the Prime Minister of Croatia about how he views current events in the U.S. and abroad.
It is up to the American people to decide. What is important that the America walks out of the elections in November by strengthening American democracy, because everybody looks up at what happens in the United States. And last time we felt that the United States democracy was weakened rather than strengthened. So we very much expect an orderly and democratic process and smooth transition, whatever the transition will be, upon the decision of the American people.
Domestically, for you, you were in your third term. It was a little bit more of a difficult election this time around. In spite of the fact that you brought Croatia into the EU, also the Euro area, so it's now a Euro user, and the Schengen zone, so visa-free travel all around Europe. Were you a little disappointed that all those successes didn't lead to an outright victory, in the sense that you've had to make a coalition with the far-right homeland movement?
Well, we always had a coalition both in first, the second and the third mandate, but what we did is that we converged on the main points of our government program, and the government program is predominantly the program of my party, that I'm the president of, Croatian Democratic Union. I think that the Croatian citizens gave us confidence for the third time. Maybe it could have been one mandate more or less, but when I look from a, let's say, a larger perspective, the fact that we have regained confidence in such global and regional, meaning European, but also national circumstances, with consequences of COVID, with two devastating earthquakes, with the ramifications of the energy crisis due to the Russian aggression against Ukraine, inflationary pressures, we have, despite that, managed to join the Eurozone, the Schengen area, get rid of visas with the United States, enter the global entry program, European Stability Mechanism, on the verge of joining the OECD, and most of all, increase GDP. In last 3 years, the average GDP growth in Croatia was 7.6%, only 2 EU member states having a larger, or I would say higher percentage. And also, of course, which is very important for us, since we are at Bloomberg for the first time in our history, recently 2 out of 3 credit agencies put us into the A investment credit rating, which I think is a recognition of the reform process, good absorption of the EU funds investments, and I think that Croatia is on the right path, especially being reflected on the salaries and pensions of our citizens.
Well, you are referring to the S&P and Fitch upgrades
Exactly.
to A-, the highest in your history, as you've said. Are you planning to use those upgrades in the primary markets, or are your needs already met?
Our needs in terms of refinancing, that's our continually, I would say, refreshed. But what is happening now, we are, of course, having the possibility to have lower interest rates. There are immediate effects on our banking sector, in sector of loans for our citizens, and the entire economic perception of Croatia having been fully with our 2 feet in the heart of the European Union, with a very good reputational assessment by the credit rating agencies, is a boost for Croatian economy. Most of the business sector that I've been in touch with are really excited with this development, and it's helping them to work on their productivity. It's helping them to work on their exports and contribute to the Croatia's economy.
Check out the full interview with Croatia's Prime Minister at Bloomberg.com. Coming up, Verizon has agreed to a $3.3 billion deal centered on cell tower leasing rights. We're speaking with the company set to take the helm of thousands of towers around the United States to add to its portfolio. This is Bloomberg. This is Bloomberg Markets. I'm Bonnie Quinn. Time now for our stock of the hour. And today we're looking at DigitalBridge, up around 15% over the past 30 days. It is still down about 18% though year to date. It's part of a Verizon deal announced today to sell the rights to lease thousands of mobile phone towers to digital infrastructure firm VerticalBridge. In the deal, VerticalBridge will obtain the exclusive rights to lease, operate and manage the portfolio of almost 6,400 towers for about $3.3 billion. For more on this now, we're joined by Marc Ganzi, CEO of DigitalBridge, which is the majority owner of VerticalBridge. Marc, thank you so much for coming into studio. So explain to us why you would want to buy these towers from Verizon only to have Verizon lease them back again. It sounds like a great deal for you guys, perhaps, but maybe not so much for Verizon. Why would they sell them?
Well, I think it's a win-win for both of us. These are really the youngest towers that Verizon had, and as they look to monetize assets, because the street really doesn't give them credit for owning mobile infrastructure. We've been a teaming partner to Verizon for about 30 years. In fact, the first cell site I built in 1994 was with Bell Atlantic Mobile, the predecessor company. So for us, it's full circle for my partner, Alex Gelman, and I. We've also been in a joint venture with them for about 5 years, doing built-to-suit towers, where we build jointly together their mobile infrastructure. So this is a really important customer for us and somebody that we want to continue to invest in as they build their 5G infrastructure.
So how do you price a deal like that? Because at the moment they have a deal for 10 years, which they can then elongate, right, for up to 50 years or something like that. With interest rates where they are, what's a good value for the leasing of a tower for you?
Well, I think for us, we look at the relative youth of that tower. Today, that tower holds about 1.1 tenancies per customer. The great thing we love about Verizon is they build infrastructure to hold multiple customers. So we really liked these towers because they hold 3 tenants per tower. So the opportunity for us to take those towers from 1 tenancy to 3 tenancy is an opportunity for us to double or triple our investment. So we think it's a smart deal.
Now, who's responsible for that? Is that Verizon?
So we take on the active management of the towers for Verizon. We'll handle cutting the grass, paying the real estate taxes, and of course putting on the incremental equipment from folks like AT&T and T-Mobile and Dish. But also our primary customer is Verizon. And as they continue to upgrade their equipment and they continue to densify their network for 5G, we'll be their partner. We'll help them get that equipment on the tower. We'll make it seamless for them. And again, it's a long-term partnership, not just 10 years.
Is there any limit to the amount of tower deals you will do? Is it a kind of a land grab like the cable cowboys were in the old days, for example?
Well, we've been doing towers for about 30 years. My partner, Alex Gelman, and I go back a long time building and operating mobile infrastructure. You know, 2 years ago, we were the partner of choice to Deutsche Telekom. We did that 60,000 tower deal in Europe with them. We've partnered with many of the mobile operators in Asia. And today we have almost over 100,000 towers across 9 different companies at DigitalBridge. So we're investing holistically in the future of mobile edge infrastructure. And we think that's really important, particularly where applications are going in the future. The edge is actually where the device is, Vani, and that's really critical.
Yeah, so I'll take that as a kind of, we're interested in most towers that go on sale out there. But I do want to ask you about outside of the US, because one of the previous times we spoke, you were primarily in the US. Now it seems like you're way more international. And people familiar with the matter did tell us recently that you were considering options of a sale of one of your Southeast Asia firms, EdgePoint Infrastructure. Can you give me any more details about that?
Well, look, EdgePoint was a great idea. We started there 4 years ago. We backed a great CEO and a management team, much like we did in VerticalBridge 10 years ago. We don't have a problem standing up new management teams and investing in new ideas. And so with Suresh Sidhu and the team there, we've built a fantastic portfolio. We're in 4 countries. Most people don't know that Southeast Asia is the same size as the United States. When you take those 4 countries and you put them together, it's over 350 million people. We own about 15,000 towers there. We're committed to building another. We'll be over 22,000 towers there. So it's an exciting property. I think investors are looking at that.
So why sell?
Well, I think, look, our job at the end of the day at DigitalBridge is to build great companies, build great platforms, and then ultimately in our current format as an alternative asset manager, we have to return capital and we have to return profits back to our public shareholders. So, you know, we've had a lot of opportunities to build assets, continue to raise capital, but also as part of our infrastructure funds, we have to return capital as well. And so this is really the story with EdgePoint, and we'll see how that plays out in the next year.
Do you have a buyer? Can you confirm that you are selling?
Usually these processes start with somebody calling us. So we have a lot of interest in EdgePoint. It's an incredibly valuable frontier business for us because we were one of the first ones to get to Southeast Asia and accumulate all this infrastructure and the ability to build. So we'll see. There's a price where we're a seller, and there's a price always where we can hold as well.
So DigitalBridge, it is still down 18% year to date.
Yes.
Are investors being fair?
I think, look, on a sum of the parts basis, I don't think they're being fair. I think what we don't get credit for is our balance sheet. We've got valuable assets sitting on our balance sheet. We're also the main investor in a lot of our funds. So that balance sheet gets wildly undervalued by the street. And I think the things that investors are waking up to now, Bonnie, is, you know, we have $33 billion of capital at work today. We own 20% of those profits that go back, a portion that goes back to our public investors. A couple weeks ago, there was a rumor about Switch going public for $40 billion. That was the business we took private for 11. I think investors are starting to warm up to the fact that there's a lot of profits in what we're doing. And so you look at the balance sheet, you look at the carried interest, and then you look at our management fees. Today, we're just valued on our management fees. Nobody gives us credit for the profits interest that we're creating off that $33 billion. There's a huge opportunity there, and I think investors are starting to explore that. We're in our second quarter as an alternative asset manager. We converted from a REIT. People don't like confusion. People don't like transition stories. You know that. And I think as people get comfortable with our story, and most importantly, they get comfortable with the value of our platform and how we serve the AI greater ecosystem, it's a unique platform. Nobody does what we do on a global scale or global basis, and I think we got to take that story to the street.
Marc, looking forward to the next time we chat. Thank you so much.
Thanks, Bonnie.
Very, very happy to have you in studio. That is Marc Ganzi, CEO of DigitalBridge. Coming up next hour, Fed Chair Jay Powell's first speaking event since he announced the central bank decided to cut interest rates by 50 basis points. We'll count you down as markets listen for more insight. This is Bloomberg. This is Bloomberg Markets. I'm Bonnie Quinn. Traders awaiting remarks from Fed Chair Jay Powell later this session. Powell will be taking the stage at the National Association for Business Economics at that conference. This will be Powell's first public remark since he announced the Fed rate cut decision. For more on what markets might be listening for, we're joined by BMO Capital Markets senior economist Jennifer Lee. So we have heard from other Fed speakers, Jen, but this is the first time that we'll hear from Powell. What will be his main message?
Hi there, and thanks for having me on the show today. I think his main message is not going to stray too much from what he said a couple of weeks ago. I think that was the equivalent of his mic drop back, when they had the 50 basis point rate cut, and he said all the right key phrases that that not to expect, this type of this size of rate cuts going forward, or rate cut going forward, that they're not in a rush. They're going to take it on a meeting by meeting basis, and they are not on a preset course. And since then, it's been interesting. I mean, we saw a few economic indicators that actually were coming in better than expected, like some upward revisions to GDP historically back, and those were actually pretty interesting. Another personal income and spending report that showed that consumers a bit more cautious on the spending front, but they are still spending on things like recreational goods and services, and recreational cars, that sort of thing. So there's still some confidence, and also some mixed consumer confidence reports as well. So nothing to show that they should perhaps be going for another 50 basis point cut at the next meeting. So I think he's going to play up whatever he said again 2 weeks ago when he did that mic drop equivalent, and not stray too much from that message.
Yeah, I mean, will he, give us any clarity, do you think, on what kind of move we'll need between now and the end of the year? I mean, it seemed like the markets were anticipating at least 75 basis points more, but that would entail a 50 basis point move at some point. He'll need to give some clarity on that, right? He'll be asked about that.
Correct, right, for sure. And I think he's probably going to lean toward the labor market, given that is now their focus. I thought it was quite interesting that the Atlanta Fed's Bostic was out just within the last half hour or so, saying that he's going to, first of all, he fully supported that 50 basis point cut, but he's going to be watching the job market very closely. And he actually said that if they see anything below 100,000, then it's going to require some more discussion about what is happening with the job market and whether or not they're going to have to go another 50 basis points. So I think it's going to be all about the job market. And when he is asked, he will probably point to that indicator as well.
Interestingly, the people he's speaking to, I mean, he's speaking to everybody, obviously, and particularly to the markets, but at, the NABE, 39% of those surveyed there this time around cited a monetary policy mistake as the greatest downside risk to the US economy over the next 12 months. How does he, reassure them and the markets that there won't be a monetary policy risk, even as we're seeing an election, we're seeing unrest in the Middle East continue, and lots more?
Right. There's so many risks out there. And I think his job and his duty to sort of reassure everyone that they are not asleep at the wheel. And, he sort of explained that away a couple of weeks ago about that 50 basis point cut when he said that the job market and the economy as a whole is still in pretty decent shape. And they're basically trying to cut them off at the pass before it gets even weaker and sort of give it a little bit more oomph. I likened it the other day to, you're kind of feeling sick, you're not feeling that great, so you're taking some medicine now before you get even worse. And I think that's what the explanation was for that larger than expected, for at least for economists, cut. And I think he's going to, again, stick to that message that it's going to have to be something pretty significant for them to actually move again at a 50 basis point, the size of a 50 basis point cut.
All right. Well, we will take you through it right here on Bloomberg TV, and our thanks to BMO Capital Markets senior economist Jennifer Lee. Do stick around for that Powell news later on. In the meantime, let's take a quick look at how markets are shaping up as we head into the 1 p.m. hour. The S&P really flat, and the Nasdaq itself up about 0.1%. That does it for Bloomberg Markets. I'm Bonnie Quinn.